Hello and welcome to another update video about ADA. Yeah, the ADA chart is now in support or did come into support today. I shared that micro support area already earlier today with members on Discord. It is one that I added today. I mentioned to you yesterday that, should we get rejected there, then we should be able to add another support zone, which I did today. The market seems to be respecting it. But let me explain what this is about. So obviously the idea is that we move down here in this B wave pullback into the yellow support zone. And I count this move down as an ABC structure. So A wave, high B wave, C wave down. It's a 3-wave move. Surely that there will be other interpretations that are valid here. It is an extremely messy and difficult chart to track at the moment. But, still, it's been respecting the relevant parameters. For example, what did we say? We highlighted, okay, maybe wave B is finished. Then we looked at this move to the upside. It was only a 3-wave move. So that doesn't really give us a great, great confidence that a lasting low is in. However, considering that we could be in a C wave to the upside after a B wave low, it is possible that the move to the upside is an ending diagonal. That ending diagonal would be a 5-wave move. Wave 1, wave 2, wave 3, wave 4, wave 5. And that 5-wave move might be in the making. It's just that you can't really trust these patterns. You can't trust diagonal patterns necessarily. So you just need to be a bit careful, a bit cautious. But the idea is, knowing about the context is important in Elliott wave. So that we know about the context helps us to understand that, it could be a C wave, and the microstructure can therefore be interpreted in light of that context. So the ABC structure that we've got down there, could be the wave 1 of that ending diagonal. Yeah, but again, it's a bit of a constructed count. There are other interpretations that are possible as well. If I showed you all potentials here, it would take an hour or something. Would it make sense? No, because corrective structures always morph, they always change. So I try to then define the support regions which are relevant. And if some are not very reliable, I will let you know. In this case, I've added a support zone highlighted in orange between 59 cents and 63.7 cents. I don't find it very reliable, but it is a possible zone where the price can turn around. The idea is that the ABC structure here possibly, formed wave 1. Alternatively, it's a larger ABC structure that's happening here. But in both scenarios, we should see a reaction to the orange support zone. It's, in terms of respecting the parameters, I gave you already on the weekend a target for this C wave here. And that was reached at 68 cents and the price got rejected. So when opening the chart earlier today, I was like, okay, that makes sense. So we have an ABC structure complete. So we label that as a potential wave 1. The pullback could be a wave 2. Alternatively, it's an AB, okay, and the move up could be a C wave. In the short term, it doesn't really matter, but they will diverge after this top. And then in the white count, we could get a higher low in wave 4 and a higher high in wave 5. So essentially, it's now all about, okay, does the support area hold? A break below 59 cents would mean that we're probably in the yellow count, which allows for a much larger ABC structure, actually maybe then WXY in wave B. So that would be the alternative. I haven't labeled the whole thing, but it would be not only an ABC then, but actually WXY, and the Y wave is an ABC. Quite a complex correction. So throughout throughout the year, throughout last year, I've highlighted many times and continue to do so that whenever we're dealing with corrective structures, we have many more options to deal, to basically, many more options that the chart could take. So we need to be much more mindful that structures could break or support levels might be less reliable, but that's just normal in corrections. That's for corrections and diagonals. That's why every chart that's not moving in an impulsive structure is potentially more difficult to trade, at least when we're dealing with the micro structures. Obviously, the microstructures here, They can more frequently, but they help us to understand which support levels we can use. Like here, for example, the orange zone, that's our micro support zone. Okay, what happens below 59 cents? I already highlighted to you is possibly the yellow count then. And in the yellow count, the much more important level than 59 cents is the 50-cent level. Because only below 50 cents, I would really need to reinterpret the larger element of the chart, the larger time frame. Because at the moment, the idea would be, okay, we are still in this uptrend that started in June last year, in this larger diagonal pattern. And I can go with that assumption as long as we're holding the 50-cent level. Yeah, even if we break 59 cents, it might restart that C wave to the upside later. But below 50 cents, that will become much less likely. And I would have to assume that this entire rally from the June low last year completed and we have to deal with a much larger wave 2 correction. But that is a possibility, a potential. There's nothing confirmed about this at this stage. So we go with the plan, we just follow the plan. We are watching still for higher prices in the short term. In the immediate short term, I'm watching if the orange support region is holding, and a break above the 67-cent level would be a first indication that we are heading here to the upside. That's my update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.